Hi guys, hope you're well. I want to explain to you the OTE levels, what to look for, when to look for them, and essentially how you can find really high probable setups. What you have to remember about anything in trading is that price is going to move in a certain direction. Price is going to react to certain levels. So we do this based around these fib levels right here. Now, what I'm going to do is just move them here and allow you to pause this video and actually screenshot these levels if you want to use them. Trading is subjective. Fibonacci tools and levels are subjective. I'm showing you what has worked for me in the past based on utilizing these particular levels. Now, if you look at where I've shaded certain colors in, you can see here that we've got the 0 and then we've got the start here. I've got 71 to 88.6% highlighted in red, and in blue I've got 50%. The blue line at 50% indicates halfway between the start of the range to the bottom of the range. So that is equilibrium. What that essentially is showing you when a price range comes into a level. And when you get price come into that level, let's say for example price is traveling down to here, you would assume that price is in a discount level because you have two levels in price. You have something called discount and you have something called premium. How this works in trading is that when you are looking for buys, you want price to come into the discount level. Now, when you're looking for sells, you want price to come into the premium level. And it's just like with anything. If you go and buy something from the shop, you want to buy it cheap and you want to sell something for a premium. It's exactly the same concept when you're looking at the charts. When you're buying price, you want to buy it when it comes into a discount level. When you're selling price, you want to sell price when it comes to a premium level. Now, the key rule for these OTE levels is that when you're buying something, you want to be buying at a discount. When you're selling something, you want to be selling in a premium. But we want this red line here, these three red lines here, if we're selling, to be above here. So if the range was flipped the other way, you would measure from the top to the bottom to get your premium level. And essentially, when price comes all the way back up, you want price to come into the premium zone and then sell off. Now, the only thing we utilize these red levels for, 71, 78.6 and 88.6, is because that is a very, very, very strong discount level, and price is known to react off of these levels. So basically, when price comes to one of these red levels here, that's a really good sign that you could potentially capitalize on these opportunities. What that means from a trading perspective, it's very, very simple. I'm looking at price pushing higher. I want price to come into my discount level because price is bullish. You can see here price is pushing higher. So I measure the bottom of the range to the top of the range. As you can see, this line here, obviously I've drawn it, but this line here has come into this area here between 71 and 88.6%. That is called an OTE level, optimal trade level, which is inside the discount zone. The discount zone for this level here is at the 50% and below. So it's the bottom half of the trading range. That is your discount area. So when price expands to the upside again, I'm just going to delete these fibs to make it look a little bit more sense. When price expands again, you want price to come into your discount area. So what's the discount area of the new range? We've got the low all the way to the top. You can see here price is now near enough at the OTE level. So you highlight your OTE level and you've obviously got the big box, which is your 50% level, and below that is your discount area. Let's take this a step further for you though, because you can't just blindly enter the market inside these levels. When you see price coming into your discount area, and I'm just going to highlight discount area right here. When you see price coming into your discount area, you don't just want to be pressing buy in here. You need a point of interest. You need something to be happening. So inside this discount area, you are looking for something of a point of interest that price will essentially react off of. So you can be looking for an order block. You can be looking for an imbalance, or if you want to call it a fair value gap, call it a fair value gap. You could be looking for something called a breaker block as an example. There's just a few different examples, and over time, and in the college program especially, I teach these levels with a lot of detail. Now, inside your discount level area, which is this box right here where you can see price came into, you need to look to your left. So if on the left you see an area of imbalance, which is right there, and you also see a really attractive looking order block, which is right there. You can utilize that level on the understanding that price is going to push into this level and carry on moving higher. If you measure the fibs again for accuracy, this is where the OTE levels come in. We're going to highlight the 71 to 88%. As you can see there, price comes into the 78% in this example and then pushes higher. Your entry, or my entry, would be in this instance just probably at the 71% level, stop loss below the low, and I'm just looking to target the next high, which is this area of liquidity right here. Okay, so it's very, very simple in what I'm trying to show you. And that is essentially what the OTE levels are. So I've highlighted the discount area. I've highlighted imbalances, order blocks. I've highlighted my OTE level. That is what I'm looking to do. Now, if you miss this entry, this is the beautiful thing. Let's say you miss this entry completely. Well, you look for evidence that this is going to go back again because price moves in cycles. So we look for price, come back down. We've got a new range and we mark out the exact same area again. So this time round, we're moving this box up here. So now we're looking in this range. I'm going to delete this. And what we're looking to identify is there any imbalance in here? Is there some form of order block in here? And if there is, you've actually got, and you're able to utilize a re-entry because that's essentially, and I actually prefer these entries, by the way, because it's giving you the extra piece of confluence. If price is reacting from a higher time frame point of interest area here, you can see price pushing higher, coming back down, pushed up again, and you can look maybe on a smaller time frame for an entry. And once again, your entry level only needs to be at this level right here, stop loss below the low, target this liquidity right here. So what I'm going to do now is take you to the charts and show you the Euro USD trade that played out. Obviously, this is in the benefit of hindsight because the trade has already played out, but I want to show you just how powerful this method of trading is. As you can see, price comes all the way down to this level here, and you can see price reacts off of this 1 hour order block right there. After that happened, what can we see that happened? Price expands aggressively to the upside. Now, there's a reason price is coming down into this area here. And we teach this in the college program, specifically when to look for the London session reversal. So that there is the London session low of the day inside this point of interest, which is this order block right here. And we have this push high. So with the confirmation that we have, which again, I can go into more detail in the future for you. We know this is the London low, but we're looking at OTE levels. Okay. Huge push to the upside, clear target of liquidity, which is right here. The benefit of hindsight, you can see price come back down and then push higher again, but this is not the entry. Okay. This is not the entry. I want to show you a really awesome entry because price comes into here just at the end of the London session, then expands higher again. But if you get your fibs and you measure this level right here and you see price comes to the OTE level right there. If you utilize what the OTE level is sitting within, you can see there's an order block. You can see there's a higher time frame imbalance, which is also inside the discount level as well. So really, really powerful stuff. You could generally enter in here. I didn't, but you can enter in here. So when price comes to this level, for me, I want to see the reaction. I want to see where this is potentially going next. And that is where I go down to a smaller time frame. As you can see from this level here, and again, this is the London session low that we highlighted. We swept under all of this Asian session liquidity right here. We also came under a very key level, which is the midnight opening price. Once again, we teach all of this inside the college program, the opening price. Look at price manipulating lower. Very specific and awesome level to get buys on right there. But we miss it. Let's say you miss it, price expands higher. This is the safest and best entries you can do. Price comes back down to the OTE levels on a smaller time frame, pushes to the upside. I'm now interested in this range here to this range here. And if we highlight the whole discount area and we are able to understand and recognize here, what are we looking for? We're looking for, what did we talk about? We're looking for order blocks. We're looking for imbalances and potentially breaker blocks. There's plenty others, but I'm just going to use these three for now. Now, can we see an order block? We can see one right here. We can see, I'm going to use all three of these right here. Okay. Can we also see any imbalance? We can see imbalance right here. So now I'm faced with a decision. We've got the imbalance, we've got the order block, we've got all this good stuff that we could potentially go by. Where do I enter the market? Do I wait for price to come all the way down here? Do I wait for price to come really low down here? I know I want my stop loss under here, and I know my target is that liquidity which is sitting up there. But what am I looking for? So now I'm going to just measure this again. I want to enter at 71%. As you can see, price dips to 71%. If you highlight the red levels here, that is your OTE level. I was entering at the 71%. I barely got into drawdown. Price comes into this level here, straight up to that liquidity. We're using this candle here was news, not too high impact. It wasn't NFP or anything like that, but this is also in line with the economic calendar. Price comes all the way back down to the midnight opening price. That is not a coincidence as well. Price expands from that area, comes back down to the OTE levels, and if you just strip back all of the noise, you can see your OTE level is right there. And that is how you can utilize from some of the most powerful setups. This is my favorite entry. I look for this time and time and time and time again. This one entry on its own can generally change your life. You just have to invest in yourself. You just have to show to yourself that you're willing to put the work in, and you're willing to backtest, you're willing to learn, you're willing to practice, because you're going to get losses, but you're also going to get wins. And I'm all about teaching you risk management. I'm all about teaching you the simplicity of what we're actually looking for here. So hopefully you've enjoyed this video, guys, and I will hopefully see you guys very, very soon.